What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the bloodbath that we saw today in the markets. And today we had an absolute bloodbath across the board. Nothing went up today, guys. The only thing that went up today was gold and silver. But other than those two metals, this was an absolute bloodbath across the board. And also the 10-year treasury yield went up today. So Russell 2000 goes down today 0.71%. Nasdaq goes down 2.18%. Dow Jones goes down 1.19%. And the S&P 500 went down 1.69%. Crude oil keeps on going down because of the situation that we are seeing as of now in China with lockdowns all over the place. This is, by the way, good news for the bulls, despite the fact that today we had a very negative day. So oil goes down 3.48%, and it closed today's trading session at $94.84. Gold, as I just told you a few seconds ago, goes up today 0.59%, and silver went up 1.60%. The 10-year treasury yield, guys, apparently wants to get above 3%. Today it went up 2.47%, and it closed at 2.78%. So are we going to see the 10-year treasury yield above 3%? That's possible anytime soon. But we have, as of now, the 10-year treasury yield, or TNX, very overextended, very overbought in technical terms. So we might see some sort of pullback in the upcoming days. The VIX, the volatility index, went up today 15%. And it closed the trading session slightly below 24 points. This is going to be a very important week for the markets, guys. Keep in mind, on Wednesday, the new earnings season is going to kick off with JP Morgan. Throughout this week, or from Wednesday and on, we are going to have most of the most important banks posting earnings, the JP Morgans, the Goldman Sachs, the Wells Fargos, the Citigroups, and so forth. So that is obviously something that is going to move the markets. And tomorrow, the hour of truth. The CPI data report of March is coming out, a month that was very negative inflation-wise because of the war in Ukraine. So the markets, for the most part, guys, tomorrow are going to be paying close attention to core CPI, which is an information that derives from the CPI data report that excludes gas and food. So what the markets are waiting for is the CPI, the whole thing, to come out at 1.2%, or the markets are expecting an increase of 1.2% month over month when it comes to CPI, and 14.4% year over year. A nasty report, guys. Tomorrow is going to be the nastiest CPI data report that we have gotten in, I don't know, something like 40 years. However, when it comes to core CPI, the most important metric that the markets are going to be paying attention to tomorrow, we are expecting an increase month over month of 0.5% and year over year of 6.6%. So what could be happening over here, guys? If core CPI happens to come out way hotter than expected, let's say 0.6, 0.7%, needless to say 0.9 or 1%, then obviously, guys, that is going to be signaling that the Federal Reserve is going to be extremely aggressive when it comes to hiking interest rates. And the financial media and the big money of Wall Street is going to start to say that a recession is very likely to come because the Fed is going to be very aggressive, hiking interest rates. So that's obviously bad news for the markets as a whole. However, I'm thinking, guys, this is me being a bull, as usual. If core CPI happens to come out as expected, or even better than expected, then maybe the markets could make a case for inflation to be topping. That is going to be positive, because that would imply that this is going to be the worst CPI data in 40 years, but that from now on, the inflation figures that we are going to be getting, let's say in May, June, and so forth, are going to be looking, better inflation-wise. So maybe on that news or on that idea, the markets could rally tomorrow. So tomorrow is going to be a very tricky trading session. I got some Facebook puts in order to have some sort of hedge when it comes to the CPI data report. And let's see what happens, guys. As of now, we have most of the big tech stocks in a very severe oversold condition. So maybe we might see some sort of relief rally tomorrow when it comes to the big tech stocks, even having a worse than expected CPI data. So tomorrow is going to be a very interesting day. So buckle up, because volatility is going to be all over the place tomorrow, most likely. When it comes to the sectors of the markets, horrible day across the board. No gold medals today, guys. The 11 sectors went down today. We can say that the best performing sector, and I am quoting like best because it also went down, was industrials, which went down 0.32%. And when it comes to the most important sectors of the markets, technology, tech stocks got killed across the board, guys. Semiconductors, the big tech names, all of those got absolutely decimated today. So tech went down today 2.52%, and the financial sector keeps on going down, guys. Unbelievable. Financials cannot catch a break. So the financial sector went down today 0.45%. If we take a look at the advances and declines distribution, we can confirm that we had a tough day out there, with 4,755 stocks going down and 2,879 stocks going up. And now let's go ahead and take a look at the S&P 500. And oh boy, is the S&P 500 looking ugly once again? Yes, it is. So the S&P 500 goes down today 1.89%, and it closed today's trading session at 4,412 points. The first aspect that is worth to be pointed out over here, guys, from a technical standpoint, is the fact that the bulls gave up the 200-day moving average. Very bad news for the bulls out there, and very good news, therefore, for the bears. So, needless to say, the S&P 500 is in absolute control of the bears as of now. The RSI of the S&P is a bit low, but it isn't very low. It is sitting at 34 points. So I'm thinking that if tomorrow we happen to have a worse than expected CPI data report, the next important support for the bulls is going to be 4,370 points. We are talking about a former area of support back from mid-February and also back from mid-August. I think that this is a spot in which the bulls are likely to find support and then at least observe an intraday relief rally. So watch out for support near 4,370 points. When it comes to the main task for the bulls in the upcoming days, or let's say in tomorrow's trading session more specifically, I am thinking about the 180 SMA on the 4-hour chart at 4,460 points. This is also a previous area of resistance back from late September. When it comes to the most important task for the bulls throughout the week, that is going to be reconquering the 200-day moving average at 4,500 points. Because above the 200-day moving average, they start to regain some sort of control inside the S&P 500, and below the 200-day moving average, the bears are in absolute control of this index. Watch out for the bears in the upcoming days, guys. If 4,370 points happens to be broken to the downside, the next gap down would be down to 4,280 points. This is a previous area of support back from early October. And now let's go ahead and take a look at the NDX, the Silicon Valley guys. What is going on over here? The NDX goes down today 2.35%, and it closed today's trading session at 13,990 points. In the case of the NDX, guys, there is a difference relative to the S&P 500. The NDX is more oversold relative to the S&P. And why? Well, because the RSI of this index is sitting at 28 points. This index is very, but very oversold. Keep in mind, guys, that also the big tech stocks, the Apples of the world, the Microsoft of the world, the Amazons of the world, the big boys are also in a very remarkable oversold condition. So I'm thinking that despite the fact that maybe we get tomorrow a very nasty CPI data report, we are going to see at least an intraday relief rally in the case of the NDX. So I'm thinking that if 13,900 points happens to be visited tomorrow in a quick way, in a quick manner, the bulls are very likely to find support, and from that area, we might see some sort, as I just told you guys, of relief, intraday relief rally. 13,900 points happens to be a previous area of support back from late January. So, in the case of the bulls, the most important task that they need to carry out tomorrow, or let's say in the course of the week, and as I just told you, in the case of the S&P 500, the main task for the bulls is going to be reconquering the 200-day moving average. In the case of the Silicon Valley guys, we are talking about 14,400 points, 180 SMA on the 4-hour chart, and also a previous area of resistance back from early March and a previous area of support back from early October. And if you guys remember, I told you during or in many of the videos that we posted last week that until Friday of last week, we had, in the case of the NDX, both a golden cross with the 50 SMA crossing above the 180 SMA on the 4-hour chart, and a death cross with the 100-day moving average crossing below the 200-day moving average. And I told you, if you guys remember, that when we have two different formations on a same chart, a golden cross and a death cross with simple moving averages and also daily moving averages, the formation that unfolded when it comes to the daily moving averages is going to be heavier, is going to be more important relative to the formation that unfolded with the simple moving averages. And that's exactly what happens here. And why? Well, because we still have in full effect the death cross with the 200 DMA crossing below the 200 DMA, and today the golden cross was invalidated 100% because the NDX closed the trading session below the 180 SMA. So needless to say, the bears are in absolute control of the Nasdaq 100, but in my opinion, and taking into account that most of the big tech stocks are already oversold, we are going to see at least an intraday relief rally anytime soon, regardless of the CPI. And now let's go ahead and take a look at the first stock of this video. Shopify goes up today 2.35%, and it closed today's trading session at $617.38. And what do you know, guys? Shopify wants to carry out a 10-for-1 stock split. This sounds very fishy. And why? Well, because we need to ask ourselves, why the upper management of Shopify didn't announce a stock split when the stock of this company was trading at $1,800 back in mid-November? Why are they announcing a stock split when Shopify is trading 70% of the highs? So obviously, guys, they're trying to artificially pump the stock of their company. So this was a very poor move when it comes to the upper management of Shopify. So we have a horrible technical chart, despite the fact that that stock split was announced. Shopify is trading on a clear downtrend, technical downtrend actually, below all the moving averages. We can also see that a golden cross that unfolded back in early April is absolutely invalidated because Shopify has been trading below the 180 SMA during the last 3 trading sessions. So this is a very ugly looking chart. I don't think that in an environment of higher interest rates, in an environment of fears about a possible recession, and taking into account that Shopify is a higher multiple stock, despite the fact that the stock of this company is trading 70% of the high. So I don't think that this stock split is going to change the narrative of the markets relative to Shopify in the short term. So I am going to stay away from Shopify when it comes to buying this idea of the stock going higher. Because a stock split was announced. By the way, there is going to be a vote somewhere in June to decide upon this matter. However, I might be willing to take a short-term trade on Shop if $582 happens to be visited in a quick way anytime soon. $582 is a previous area of support back from last Friday and also back from late February. So I'm thinking that any quick visit down to $585 is likely to come across with buyers, in which case we could see a bounce back up to $660. We are talking about a previous area of support back from late March that coincides with the 180 SMA on the 4-hour chart, from $585-ish up to $660. This could be a 10% profit trade. And now let's go ahead and take a look at the second stock of this video, SharesPoint. And in the case of SharesPoint, the stock of this company goes down today 1.49%, and it closed today's trading session at $16.49. So, SharesPoint, or the bulls of SharesPoint, gave up today the 180 SMA on the 4-hour chart. As of now, that's not obviously a good sign. The stock of this company is trading once again below all the moving averages, so this is no longer kind of a good looking chart. However, I'm thinking, and taking into account that the RSI of SharesPoint is sitting at 32 points, already a bit low, I'm thinking that if the bulls happen to pay a quick visit down to $15.50, this is a previous area of resistance back from early March and also back from mid-February. They're going to be able, the bulls are going to be able to find support over here and then bounce back up to the 180 SMA that I just told you guys about on the 4-hour chart near $16.60, which also happens to be a previous area of resistance back from early January. If I were able to take this trade from $15.50 up to $16.80-ish, this would be an 8% profit trade. And now let's go ahead and take a look at the second stock of this video, NVIDIA. And oh boy, the semiconductors absolutely killed. SMH has been going down for 5 consecutive days. The same goes for NVIDIA. And as of now, the stock of this company, guys, is very oversold. So we have seen a lot of downwards pressure when it comes to semiconductor stocks, because the markets are assuming that insufficient supplies, or that these companies are facing insufficient supplies in order to manufacture chips. So they believe that all of these companies are going to be posting weak earnings whenever they post earnings, in the course of the new earnings season that is kicking off on Wednesday. Is that going to be the case? I don't know. We will see what happens. However, and regardless of the of the insufficiencies when it comes to supplies in order to manufacture chips, from a technical standpoint, all the semiconductor sector, or industry rather, is very oversold. They can keep on going lower. Obviously, I am not going to deny that. The fact that a stock is very oversold or oversold doesn't imply that it won't go any lower. But I'm thinking, guys, that if NVIDIA happens to pay a visit down to $208, a previous area of support back from early March, also back from mid-January, and also a previous area of resistance back from early August of last year, I think that at $208, and mostly if a quick drop happens to occur, in which case the RSI of the stock of this semiconductor company is going to be way lower. As of now, it is sitting at 22 points. Let's say that NVIDIA drops down to $208, and maybe we are seeing the RSI of NVIDIA at, 18 points, 15 points. That is going to definitely increase the likelihood for the bulls of NVIDIA to find support at a previous area of support and then bounce back up, in which case the stock of this company could feel its next gap up to $226, which happens to be a previous area of resistance in which NVIDIA failed on multiple occasions back in August and September of last year. So if we were able to take this trade from $209, $208 up to $225, we are looking at a 7% profit trade. And let's wrap it up, guys, with another very ugly looking chart. Jesus, Netflix, guys. Oh man. Goes down today 2.21%, and it closed today's trading session at $348. Very ugly looking chart, clear downtrend, technical downtrend. It looks like the bulls of Netflix are trying to work out some sort of bottom above $340. But this is obviously a very ugly looking short. A death cross is about to unfold on the 4-hour chart. You guys can see over here. Let me zoom in here. How this 50 SMA is about to cross below the 180 SMA. So this is a horrible chart. However, guys, and as I just told you, most of the big tech stocks are in a severe oversold condition as of now, and I think that we are about to see at least an intraday relief rally in the case of the NDX. Watch out for 350 bucks in the case of Netflix, guys. This is a previous area of support back from previous area of support, sorry guys, back from late February and also back from late January, that I think that if this area happens to be taken into account that Netflix went down today 2.21% and that it closed today's trading session slightly below 350 bucks because it closed at 348 bucks. So I'm thinking that if we happen to see a relief rally, a turnaround Tuesday for the big tech stocks out there, I think that if the bulls of Netflix take on 350 bucks on good volume and momentum, they are likely to fill the next important gap up to $380. This is a previous area of resistance back from late March and also a previous area of support back from mid-February. So if we were able to take a trade from 352 bucks ish up to 380 bucks, this would be an 8% profit trade, and Netflix is also, by the way, oversold with its RSI sitting at 30 points. And with Netflix, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me. Once again, remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, sorry guys, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently over here because we talk about the markets in 2 different languages, English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.